Everyone. Warm welcome from BCS for this GST Byte. By the time you all must be listening to this, we will be entering the new year. And before the start of a fresh year 2025, there has a last meeting of GST Council. That was the 55th GST Council meeting, which was held at Jaisalmer on 21st December 2024. Couple of changes and discussions were held in this meeting, which will have an impact for the day-to-day practice for the GST. Quite a few clarifications which were also issued, which will be helpful during our assessments also. So we'll take some of the important ones for the discussion today and for the GST bytes. To start with, there is a reduction in rate of compensation cess to 0.1% on the supplies to merchant exporters. This will be at par with the GST rate, which has already been reduced at 0.1%. Conditions of notification number 40/17 would anyways will have to be complied with. And currently, the compensation cess is extended till 31st March 2026. To move ahead, for the change of rates in services, the definition of declared tariff is proposed to be omitted and suitably amend the definition of specified premises, which is linked with declared tariff currently. The linkage will be shifted to its actual value of supply as in line with the notification already. To make the rate of GST applicable specifically on restaurant services in such hotels for a given financial year, which would now be dependent upon the value of supply of units of accommodation made in the preceding financial year. The rate would be 18% with ITC if value of such supply exceeded rupees 7,500 for any unit of accommodation in the preceding financial year, and 5% of without ITC otherwise. So earlier, as we know, that there was a kind of a mandate to use 5% rate for the restaurants, but when it came to the specified premises, that is hotels which were having more than 7,500 for the accommodation on any point of time as a declared rate, they would have to charge 18% rate. It was causing a lot of pressure on the hotel and restaurant industry. So hence now this choice would also be given, the rates would also be changed. Now, the restaurant owners of such specified premises will be given a choice, and to exercise their choice on the lines of your LUT, they will have to choose which rate they are going to follow in the succeeding financial year. That is, whether it would be 18% with ITC or 5% without the ITC. So, if 18% rate has to be chosen, then they have to give a declaration to that effect on or before the beginning of the financial year or prior to obtaining the fresh registration. The above changes will be made effective from 1/4/2025 to avoid any transition issues. So in the month of March, we will have to do this particular compliances. It is a welcome move and would really benefit a lot of restaurants and reduce the litigation to a larger extent. Also, it will have an effective cash flow management for the hospitality segment. One point which was not clear in the press release is that they are giving this option for the restaurant services. But as far as when it is concerned about the outdoor catering services, which are provided by a supplier who is working or has a registered office in certain specified premises, what will be the take for them? So we'll have to wait and watch for the notifications to check whether ODC services are also covered in this particular amendment. The next one is typically for the composition taxable persons. For them to avoid the blockage of credits, the reverse charge which was applicable in serial number 5AB as far as renting of commercial or immovable property is been waived off for the composition taxable persons, and they will be exempted from the liability of the reverse charge. The next one, which was interesting talk of town regarding the sale of old and used vehicles, including the electronic vehicles. The rate has been increased from 12% to 18% for the margin of sale. It is not that the complete taxable value, which will be levied, complete transaction value, which will go for 18%, but only the margin money which is been earned by the second-hand car dealer that will get taxed. To give an example, if a person sells his car at 10 lakh rupees to the to the second-hand dealer, and he further makes a margin of 3 lakhs by selling it at 13 lakhs, then only the margin of 3 lakh rupees will be taxed at 18% at 54,000 GST. As far as person to person sales is concerned, it is clarified that since that is not in the furtherance of business, there won't be any GST. As far as businesses are concerned, if they are selling their used cars, then only the margin which is earned beyond the depreciated value, wherein the depreciation is been considered as per the Income Tax Act, will only be considered for the purpose of GST. If the margin is negative, there would not be any levy of GST. Further, the next interesting point, which was in relation to popcorn, whether it is namkeen, whether it is packed, whether it is a caramelized sugar confectionery product, it is clarified that there is no special rate which is been mentioned here. It is only that some of the states said that when caramel is being used, it has to be taxed at a higher rate because it is more of a sugar confectionery than only being merely a namkeen. The council has decided that all the regular popcorns which are mixed with salts or spices will still be continued to be classified under HSN 2106 at 5% only. If they are pre-packed and labeled, then of course the normal rate of 12%. And if they are caramelized, or that is, they are changing the character from a namkeen to a sugar confectionery, then it would get classified under Chapter 17 at 18% of GST. One of the important clarifications which has been given is there won't be any GST payable on penal charges which are levied and collected by the banks and NBFCs from borrowers for non-compliance with term loans. So although the press release and the press note after that also conference, it provides that this would benefit the small borrowers. Yet the press note is nowhere restricting it only to the small borrowers. So the borrowers without any specific limit. So maybe the large borrowers also should benefit from this particular thing of no GST on penal charges. And we'll have to again watch out for the notification for the exact wordings which are being proposed. One of the most important aspect is the GST registration process. In registration process, we know many small companies are facing stringent actions specifically to receive the basic registration. So as far as small companies are concerned, or those with very less ITC are concerned, the concept note has been prepared and discussed, although it is not yet been open in the law, that amendment would be carried out most probably in the Union Budget 2025. Before that, there will be a discussion on this particular point in January 2025 meeting, and a simplified process of registration specifically for small companies or small taxable persons would be carried out. So we'll have to see how that particular thing comes up, and we'll have to check how beneficial it is going to come. But this is sooner on the table. The next point would like to say that council has also deliberated on the rate of GST on delivery aspects of quick commerce or e-commerce operators. There is no decision which has been taken here. The issue is typically started with when the restaurant services are being provided through doorstep delivery through the quick commerce operators. The issue was whether the 5% rate should continue as a composite supply or 18% rate for the delivery charges should be separately levied. The fitment committee is rechecking the other aspects also, because this rate change may not restrict only to the restaurants. It will be throughout for the whole of the e-commerce segment, the quick commerce segment. And in this aspect, either a specific rate of 5% being the composite supply for the restaurant may be considered, or a clarification would come that these services are to be treated separately. So again, these are held for the further and future meetings. Let us wait and watch to check what is happening in there. Moving further, there are some measures which are for the facilitation of trade. So in Schedule 3, we have known that Para 8A was already introduced for goods which are supplied within a bonded warehouse. Now, to explicitly provide for supply of goods which are warehoused within a CES or a FTWZ before the clearance either for home consumption or for further exports, it shall also be treated neither as supply of goods nor as supply of services, and hence it is been added to a separate entry in para 8AA of Schedule 3. What is not yet been mentioned is that whether Section 17.3, the explanation which was already covering services which will be prescribed under 8A and that shall not be considered for that shall be considered for the reversal of ITC, whether such a provision is also proposed for clause 8AA. There are further some of the clarifications which will be issued through the circulars to remove the ambiguity and legal disputes in certain issues. So one of the clarification is regarding the requirement of reversal of ITC by e-com operators in respect of supplies made under 9(5) of CGST Act. Council has recommended that no proportional reversal of ITC under Section 17(1) or 17(2) is required to be made by e-com, specifically for the supplies which they are required to pay tax under Section 9(5). Next clarification is regarding the availability of ITC as per Section 16(2) of CGST Act in respect of goods which have been delivered by the supplier at the place of business. Council has recommended to clarify that in an ex-works contract where goods are delivered by the supplier to the recipient or a transporter at the supplier's place of business and the property in goods transfers to the recipient at that point of time, the goods are considered to be received by the recipient under Section 16(2)(b) of the CGST Act. And recipient may claim input tax credit on such goods subject to the conditions outlined in Section 16 and 17. This very well underlines the fact that the constructive receipt of goods and or services is an accepted principle under GST. And unlike the erstwhile excise laws, where the requirement of physical receipts of the goods or services was required, that shall not be a necessary condition in GST. Important clarification again, I would say, is regarding the applicability of late fees for delay in furnishing of Form 9C and providing waiver of late fee on delayed furnishing of GSTR 9C for the period 17-18 to the previous financial year, that is 22-23. So Council has recommended to clarify through a circular that late fee under 47(2) is leviable for delay in filing of complete annual return under 44, which includes both Form 9 and 9C. We know that post amendment, when the GST audit was done away with, Form 9C now forms the part of GSTR 9 itself. So if the form is incomplete, still there will be a levy and the levy under 47(2) will continue for that. But for all the previous annual returns which are pertaining from the period 17-18 to 22-23, the Council has also recommended to issue notification under 128 for waiver of late fee for delayed filing of 9C, which is in excess of the late fee payable till the date of filing of Form 9. It is restricted only till the date of filing of 9 and not 9C. But the important condition is that Form 9C in such case has to be filed on or before 31st March 2025. So we do still have 3 more months to get the things clarified, sorted out. The clarification also does not cover the aspects of general penalties levied under 125, although the same must not be strictly imposed for procedural lapse, which is rectified later. And now that Form 9C, the penalty on that is getting covered under Section 47, the general penalty should stand nullified, and hence all the existing notices which are being served and all the ongoing assessments of the matters in appeals are concerned can be considered on the basis of this clarification or the notifications which will be proposed. And we can ask for the waiver of that additional 25,000 plus 25,000 penalties which have been levied for non-filing of GSTR 9C. Moving further, We have other measures which are pertaining to the law and procedure. So there was a landmark judgment by Honorable Supreme Court in case of Safari Retreats Private Limited, wherein the credits which are in relation to the immovable property which are used for the furtherance of supply would be allowed and section 17(5)(d) would not be applicable. The amendment was necessitated in this aspect because plant or machinery was interpreted differently than plant and machinery by the Honorable Supreme Court. The council has said that it was a typographical error and plant or machinery would be replaced with plant and machinery in section 17(5)(d) retrospectively from 1/7/2017. Although it will nullify the effect of availability of credits as laid down by Honorable Supreme Court, but it would not override the other principles which are discussed in the judgment, one of which is important was the principles which were governing the interpretation of taxable statutes, and it was very well summarized by the Honorable Supreme Court basis the various decisions which have been held earlier in this country. Almost 14 points have been mentioned therein to cover how a taxation statute has to be interpreted, and it will lay down the foundation for all the future interpretations, specifically when GST will move more and more for classification related issues. The next amendments in law and procedure is regarding section 107 and 112, wherein the pre-deposits have been reduced from 25% to 10%, where the matter is only involving demand of penalty without involving demand of tax. It is a welcome move that there are reduced pre-deposits so that justice will always prevail in case of the unfair orders which have been passed. Then amendments are also proposed in relation to ISD mechanism as far as GST Act and CGST rules are also concerned. Of course, the same things will be getting carried forward by the states also. We know ISD mechanism will become mandatory from 1/4/2025. So section 261 that for the input service distributor and section 21 also with respect to that will include interstate transactions of RCM as well. We know that currently only 9.3 and 9.4 are being covered in that particular definition. So the reference of supplies subject to taxes under 5.3 and 5.4 would also be added in this. Consequentially, 20 subsection 2 would also be amended and rule 39(1) also will be amended to make way for these changes. The last but not the least, amendment is proposed in CGST Act and CGST rules. As we all know that whatever is optional in GST soon becomes mandatory. So the IMS mechanism regarding the invoice management system, which is currently optional, will soon become mandatory. The council has recommended to amend section 38 and rule 60 to provide a legal framework in respect of generation of form 2B and to make a mechanism that it will be based on the actions taken by the taxpayer on the invoice management system. Then also there will be an amendment in section 34(2) of CGST to specifically provide for requirement of reversal of ITC as is attributable to a credit note by the recipient to enable the reduction of output tax liability of the supplier. Then also to insert a new rule 67B to prescribe the manner in which output tax liability of supplier shall be adjusted. And finally to amend 39(1) to provide that Form 3B of the taxpayer shall be allowed to be filed only after 2B of the said tax period is made available on the portal. So it is interesting to note that there will be a lot of changes and the new financial year will be abuzz with a lot of these changes. We'll have to abreast ourselves with a lot of technical as well as technological upfront to make way for our workings. And in that aspect, let us see how the notifications are proposed and how the amendments are proposed in the upcoming budget so that we can prepare very well for all the future changes. Thank you.